Good morning, good morning, good morning. It's me, Kenny Polcari, your host of the party, and today is Friday, October 7th. And look, it's still dark outside, right? I got up extra early this morning to get ready. I'll be on Stuart Varney on Varney & Company at 10 o'clock today on Fox Business. Make sure you tune in. So what is it that we need to know today? So much going on, right? Stocks fell out of bed yesterday again. Lots of concern over today's NFP report. The dollar index surges by more than 1%, which is a big move. Big daily move for the dollar. Oil continues to rise, is now up 20% from last week's lows. And AMD warns after the bell last night of a breathtaking drop in demand. Oh boy, the semis just can't get out of their own way. And what are we having for dinner? We're making the Tuscan Bean Soup tonight because winter's coming and this is a great dish to have. Stocks got smashed, right? Again on Thursday as investors and the algos go into this cautious mode as we await today's non-farm payroll report. By now, you know what the expectation is, right? We're going to restore 260,000 jobs. And while that number is robust, it would be the smallest number of jobs added in 1 month since about late 2020. Unemployment at 3.7%, but some are expecting a small increase in that number. Average hourly earnings month over month up 0.3%, year over year up 5%. Labor force participation at 62.4%. So what's the issue? Well, the issue is what happens if we get a stronger number, say 300,000 jobs? What if unemployment goes to 3.8 or 3.9%? What if the number is weaker and we only get, say, 175,000 jobs? What does it really mean? Well, a stronger number is only going to confirm the fact that the Fed has to remain aggressive. A weaker number, though, would be expected to send stocks higher, right? On the assumption that the Fed might be able to hint at changing the narrative, and everyone would celebrate saying, see, I told you, to which I would say, stop the madness. It's done. The Fed is moving at 75 basis points no matter what happens in today's report. If the number's weaker, that's going to be good. But don't go betting the ranch that the bottom is in or that the Fed is going to change course on this one data point. Not happening. And if they do, then you really have to watch out because that means they would be moving to prevent panic somewhere else. I'm not suggesting that there is any. I'm only suggesting that if they pivot, then we need to be concerned about something else. Think about what happened in the UK last week, right? Recall how the Bank of England suddenly did a 180, a pivot, right, to stop the chaos in the gilt and currency markets. At the closing bell last night, the Dow gave back 346 points or 1.1%. The S&P gave back 38 points or 1%. The Nasdaq down by 75.7%. The Russell down by 10 points or 0.6%, while the transports only fell by 14 points or less than 0.1%. In the end, investors found little to be excited about to sustain the charged rally that we saw on Monday and Tuesday. The anxiety building as the clock has been ticking towards today. And in addition to worry about the NFP report, we had to digest another round of remarks by 6 different Fed heads who all sang the same song, committing themselves to crushing inflation via raising interest rates at an aggressive pace, as they also tried to kill any speculation that there's any pivot anywhere in the future. Chicago's Chucky Evans saying that he expects the Fed funds rate to be 4.5 to 4.75 by spring. Exactly what JJ said. He actually said 4.6%. And Minneapolis's Neely Kashkari chimed in saying that the central bank is quite a ways away from pausing. So if you're expecting the Fed to pivot, you need to rethink that, really. On the back of this, the dollar index rose by 1 full percentage point. That's a big move in the dollar on a daily basis, ending the day up $1.02 or at 112.23. And while the stronger dollar should help to push commodity prices down, it did not. Oil, which is a commodity priced in dollars, continues to move higher, gaining $1.07 or 1.2% to end the day at 88.83, right at the high. It has pierced its 50-day moving average at 87.34 and is about to kiss the intermediate moving average at 89.73. If it's successful there, then the next target is going to be 93.40. And like I said yesterday, the default consensus view is now, the year-end target is now $104 a barrel, with some estimates even higher. But no one's calling for $60 any longer, not since Russia invaded Ukraine and the Saudis told Joey to shove it. Overnight, oil continued to rise as high as $89.37, just 40 cents away from that resistance trend line. At 6 a.m., oil is trading at 88.95. Now, it didn't push, the strong dollar didn't push gold lower either, right? It ended the day at 17.21, up just 30 cents, which is small, yes, but it is up and not down, gabish? Considering what the dollar did, you would have expected gold to be down more, but the strength in gold only suggests that traders and investors are moving into the ultimate safety trade. This morning, gold is trading right there at 17.20, not really doing much of anything. Treasury sold off, sending yields higher again, with the 10-year ending yielding at 3.85%, the 2-year now yielding 4.25%, marking the 10th week of yield increases and the 16th week of the curve inversion. And if you're worried over what's next for stocks, you can take a chunk of your money and buy 2-year treasuries and earn 4.23% guaranteed. That will give you income and some stability if you hold them the full term in this unstable time. So energy was the only sector in the green yesterday, right? The XLE rose 1.8%, leaving it up 48% year to date, which is a 20% move up in the last week. Everything else in the broad 11 sectors were lower. Utilities down big at 3.3%, and that makes sense. Why? Because utilities are extremely sensitive to rising rates. You see, the average dividend yield for utilities, which are really considered a boring bond proxy in the equity markets, is about 4%. So when the bond yields climb, investors can move out of the risk asset and move into the safe U.S. Treasury for the same yield without any equity risk. Think the 2-year, right? That's yielding 4.25%. When the Fed kept rates at zero, then conservative income-focused investors moved into the utility space for the income. But now that rates are providing real competition for utility stocks, you're starting to see the move out of those utility stocks into treasuries. Real estate also came under pressure. That also makes sense, right? Higher rates negatively impact real estate. 30-year rates for someone with a 740, 750 credit score are now just kissing 6.9%. A score below 740 pushes you up and through 7%, right? We saw mortgage apps decline by 14.2% this week, and that also makes sense as the cost of money rises. The semis this morning getting banged over the head. Last night after the bell, AMD came clean. The headlines really saying it all. Bloomberg runs with chip makers see breathtaking demand drop as recession looms. They also run with AMD sinks after early peak at revenue shows steep shortfall. CNBC chimes in with AMD warns of a third quarter revenue shortfall on weaker PC demand along with supply chain issues. None of that sounds any good, and so the semis are getting whacked in the pre-market trading, right? Think AMD, NVIDIA, Intel are all quoted lower, down 5%, 3%, and 2% respectively. And that brings those names down 55%, 56%, and 48% respectively year to date. Right? So it's been a tough year for the semis. And this goes on to what I've been saying all along. Estimates are just too ambitious. These companies are going to have to come clean before they actually announce. This way it shows that the management is not asleep at the wheel, and it's about the messaging, right? Better to forewarn than to play Mickey the Dunce like you don't really know what's going on, because that's not too smart. But if you're a pot smoker, you're in luck. Joey pardons almost anyone and everyone that has ever gotten convicted for having, selling, or smoking pot, saying that the legislation never made any sense. And this morning, the pot stocks are soaring. ACB is up 10%, Tilray up 10%, weed is up 38%. And if you want to play the space in the ETF space, look at MSOS, right? Advisor shares the pure U.S. cannabis ETF, and that's quoted up 11% in the pre-market. This morning, U.S. futures are churning, swinging just north and south of the unchanged line. At 6 o'clock this morning, Dow futures are up 50 points. The S&Ps are flat. NASDAQ down 30 points, and the Russell is up 3. We're getting 5 more Fed speeches today. Atlanta's Rafi Bostic, Kansas City's Esther George, Minneapolis' Neil Kashkari, Chicago's Chucky Evans, and New York's Johnny Williams are all going to be opining on what the NFP report, what the Fed is doing, blah, blah, blah. European stocks are also mixed. Italy's up 0.5%, while Spain is down 0.3. Everything else is somewhere in between. Markets there are awaiting U.S. non-farm payroll data. Bank of England Deputy Governor Davy Ramsden is set to speak at an event this morning, so we'll hear what's going on there. Remember, last week was all the chaos. The S&P closed last night at 3744, down 38 points. We remain in the 3585, 3960 trading range. It's important that the S&P, like I said, hold this low that was created at the end of September as we move into earnings season. If it does, that's going to be a positive signal. If it fails to hold, then you got to brace yourself for an even lower low in the lower high, lower low pattern that I've been describing, right? So we have to watch and see if that pattern continues to play out. Look, we are in the final quarter of 2022. Portfolio managers are certainly going shopping for names that have been completely dislocated. As I say, you should as well. Make your shopping list. And while I think the rally is going to stall once earnings start, the midterms are only going to add another level of uncertainty. And now all this geopolitical stuff around Armageddon is going to add to the angst. In the event, I do expect a Christmas rally post the election with a year-end target around 4,000-ish, right? As we move into 2023, we're going to have to see how it all kind of lays out. In the end, it's always best to stick to your plan. Talk to your advisor. Be strategic when allocating new money to your long-term portfolio, right? Keeping in cash is okay. That is a decision. Overweight, if you want to be in the stocks, overweight big, boring names that are good divvy payers while we remain in this storm. Okay, so what are we having for dinner? Well, fall is coming. It is a little bit of a chill in the air in the Northeast and even here in Florida. You know, you wake up in the morning and it's 70 degrees. That's a little bit chilly considering we've been at 100. Okay, so for this, you're going to need to start with celery, carrots, onions, and red potatoes, right? You want to dice everything up, dice all those vegetables up, and saute them in a big pot, a bit of olive oil, right? Keep the heat on medium high, stir frequently. You don't want them to burn. You want to cook them for, 5 to 8 to 10 minutes, whatever. You want them just to start to soften up a little bit. Then add a can of chicken broth and 1 can of water, right? You want to cover the veggies, season it with salt and pepper, bring to a boil and reduce the heat to simmer. Cook for another 10 minutes or so. You want the veggies to be tender. At this point, you're going to take 2 or 3 ladles of the veggies out. You're going to puree it in a food processor, and then you're going to put them back in the soup because it makes it nice and thick. It gives it some substance. It gives it a hearty texture and some great flavor. Next, you're going to take the can of cannelloni beans. You're going to open it up and empty, juice and all, right into the soup. Now you want to add some baby pasta, something like an orzo, tubettini, or ditalini, or even elbows. Leave the heat on medium-low, and you got to cook this for 10 to 15 minutes. But don't add a full box. You only add like a quarter of the box because it grows and it sucks up all the juice. Now, when it's ready, you're going to add in some fresh escarola, and you're going to mix it up. You're going to have plenty of grated cheese at the table. In the meantime, when you serve this, you want to serve this in warm bowls, and you want to have some nice Italian toasted garlic bread to eat. So for any of those who've never made garlic bread, go out. Don't buy the baguette. Buy the Italian sliced pane di casa type of bread. You want to melt a stick of butter and some olive oil in the microwave. You want to take garlic, put it through the press, right? Make pressed garlic, so you smash it all. It goes in the butter and oil, and it's all, and it mixes in. Put it in the microwave, melt it, let it sit there and relax, right? When it and come together. When you're ready, using a pastry brush, brush one side of the Italian bread. Put it on a tray, put it underneath your broiler, and toast it till it's nice and golden brown. Watch it because it'll toast up really quickly if you're not paying attention. When it's nice and toasted on one side, pull it out, just flip it over. Don't put any more butter, just flip it over. Toast the other side till it's nice and golden brown. Take it out, cut those slices in half because, they're typical big slices, so cut them in half. Put them in a nice dish and put it on your table so people can eat it with the soup. You can have whatever you want to drink. Nice white wine goes with this. A nice light red wine you could even drink with this. You don't have to drink wine at all. You could just drink whatever you want. In the meantime, you can start to see the sun is starting to come up. The day is going to be beautiful. It's going to be a great weekend here in Florida. And so until Monday's a holiday, it is Columbus Day, but the market is open. So until then, take good care.